Tuesday, March 26th, and we'll do what we always do right here, which is zoom out. If we take a longer peek at the monthly, and this is something that somebody had showed me a while back, but that the monthly kind of looked like a cup and handle. And then they say the cup and handle, actually, I don't know, to be honest, and I don't want to bullshit with you guys. But, you know, the cup and handle breaks out. Let's see, what's the target? It breaks out like the length of the bottom of the cup and the pattern's breakout level. So basically the bottom of the cup would be here. And the breakout levels here. So we're looking at about 1,000 points. And so 4,600. So 5,600 technically would be like the continuation of the breakout, 5,600 continuation of breakout on the monthly, right? That's a cup and handle pattern if you're a pattern person trading, right? Of course, obviously that's not just going to be straight up. You're probably going to have a little bit of sideways action in there. So don't get super excited about just closing your eyes and holding until 5,600, but something to think about. On the monthly, we continue to one time frame higher. Something we didn't look at yesterday, but I always like to look at is the OPEX chart. And you can see the OPEX is still one time framing higher. I do have that 52.46 marked, as I think that is kind of the level that sellers need to get below if they are going to try to move the market any lower. It's kind of yet to be seen so far, so we'll have to keep holding our breath. But it's definitely something that I think that we should or will be paying attention to as time goes on. Now, switching over here to the weekly, we can see how the weekly opened up. Not much range yesterday. We're trading completely inside the previous week's range. So definitely wanting to monitor the previous week's levels, definitely that previous week's close. Like I said, the longer we spend below that level, the better the odds are, or the increased odds that we get a chance of liquidation, and that should bring the market down a little bit. In this situation, previous week's close was that 52.93 quarter, so that's going to be the key level that we pay attention to. We did trade up to 52.88.75, and then we might have traded above it in the overnight. I haven't checked yet. I know the overnight was did trade a little bit higher, and since has pulled basically back in towards yesterday's close. 52.78 quarter, and really just not much of a day going on yesterday. Now switching over here to the daily, you can see we are one time framing lower. Another -4 bar yesterday, so definitely want to be paying attention to the close, the 52.78 quarter. Should we stay above that level, there is increased odds of a short covering rally. We want to be aware of that, because below that, if we get below this 78 quarter and we're also below the weekly close, right? Well, that's going to probably bring in, which that weekly close, like we said, is 93 quarter, increased liquidation, and target to the downside, immediate target to the downside, 52.55. That's that 9 moving average that everybody loves. Typically that's where it gets, and then you get that deeper pullback over to that 5,200. This 9 moving average basically lines up with the top of our balance, and you can see that's why we're watching this 52.46, because we have this larger balance here. We're breaking out of this balance, breaking out, looking for confirmation, looking for buyers to kind of step up, hold the level, and get that continuation higher. Failure to do that typically brings back a retest, and confirmation will come below the 52.46, and then 52.20 being the target, which is kind of like the mid of that balance. Switching over here to the profiles, a little bit of review from yesterday. Let's go ahead and edit this real quick. We'll call it +4 weekly. I'll just call it the week. I don't get too carried away. And let's change the color here to green. Okay, so a little bit of review from yesterday. A period opened up. We really just looked like a P shape for the most part for the entire day. We had talked about, in the Zoom in Discord, right? We were getting these very mechanical levels to set us off. We ended up getting that poor high. The market did end up breaking a little bit after leaving some weak references as short time frame traders tried to push the market down. Short time frame traders got stuck. The market rallied off of that, left another weak high that was one tick shy of the previous day's low. And then we got a liquidation into the close. So no surprise there. Imagine, a line here that starts with the knot, and the knot, right, playing a little tug of war. The knot gets pulled up, it gets pulled down, it gets pulled up right at the end of the day. But guess what? These are short time frame traders, so they just let it go. And where does it come? Comes basically back to, I mean, not exactly the middle, but you've got 82 here, 78 here. I mean, the range yesterday just 14 points. It was pitiful, right? But a P shape nonetheless. So it looked like shorts got what they wanted, and then we're just basically taking profit yesterday. That was the only buying that we really saw in the market. You could see in the overnight, maybe a little bit more short covering as the shorts realized they couldn't take the market down because there was no selling. And we could see overnight inventory 100% net long. We never actually traded back down to the settle. Remember, this little guy right here is the runoff period from 4 to 5. And so overnight sessions starting from 6 till now, 6 till 9:30, never able to get down there. Traded up into that previous value. Looks like it got rejected. We do have some news coming out at 10, that consumer confidence, so may get a little bit of volatility there. But we're back inside yesterday's range, and that would still leave us this one tick gap here. And to me, that's a little bit embarrassing if they're not able to fill that. So let's say we open here, not on a gap, we open inside the previous day's range. Really going to be looking for them to fill that gap, and then that is going to give us a nice area to look for the trade. As you can see, when we combine these, we do have what we can consider a bit of single prints here. We could even just draw them on just so we know exactly where that area is at, but it's separating these two distributions. So now normally, because of how yesterday was, we would be probably looking for longs on the break of this value area high, which definitely still might be the case. We break this value area high, we definitely want to be looking for these longs and that retest of that 42.93 quarter. But what's going to happen is if we don't get that continuation past this 42.93 quarter, then the market definitely could fail from there or get weak from there and drift back into the previous day's range, and acceptance back inside this previous day's range could bring us back down to the settle. Now, if we show weakness right off the bat and don't get any kind of move up, I'm not sure really, if we're looking to be buyers or if we're really just looking for the market to kind of confirm below the settle and then look to trade down into these single prints, which is down that 71. So below that 78, we're looking for a nice little 10-point move down to fill these single prints to the downside. So that's basically how I'm going to treat today. I think what's the deal here? Well, maybe I just won't screenshot it, I guess. So we'd really be looking for above that confirmation and then back towards that 5,300. And then below, like I said, we want to get below that settle, kind of confirm here, and then start trading lower down into these single prints. Inside yesterday's range, maybe a little bit choppy. Maybe we don't get a lot of action. Maybe nobody came to play today, just like yesterday, and we get more of nothing as we did yesterday, right? 14-point range, there's not really much to be said about or much to be taken away from, except for the P shape from yesterday, which really was indicative of short covering, and there was a lot of mechanical references. So if you're looking for a day for an example of mechanical references, or a day where you can really see that short time frame traders, or what I like to call short money, is in the market and in control of the market, yesterday would be a good day to replay. But other than that, we do have some consumer confidence. I think the biggest thing this week is still Friday. We've got PCE coming out, and Powell is actually going to be talking on Friday. Of course, the market will be 100% closed, not even a half day. So it's not really going to matter until Monday. I guess we'll watch maybe the futures markets on Sunday night to see if anything has changed, but not really much going on. Now, I did read an article yesterday that came out from Unusual Whale saying the global bank messaging network SWIFT is planning a new platform in the next 1 to 2 years to connect a wave of central bank digital currencies now in development to existing finance systems, it has told Reuters. So that CBDC conspiracy, quotations on quotations, that we've been talking about for a while now, where we say the Fed is trying to create their own digital currency, obviously not a fugazi. It's definitely in the works. So definitely something to pay attention to, right? Bitcoin rallied up yesterday, I think, as well. Let me just go ahead and pull it up real quick. Yeah, so we got that Bitcoin pump yesterday, pumped back up to 70K. So that's definitely something to be paying attention to. You can see that it is building a bit of a distribution up here. After that long distribution down here around the 40K, we get this nice excess, and it's definitely looking like a P shape, right? And so what we can kind of assume is that a lot of people got short Bitcoin, didn't work out, has formed this P shape. Well, P shapes are typically indicative of old business getting taken care of, so not new business buying here. So if we do stay in this range, and this range is basically from like 73,000 to about 60,000, if we do stay in this range, the longer we stay in this range, the better the odds increase that we trade back down to that 52,000 area, in my opinion. If we should continue to get excess or continue to move higher beyond this, we'll kind of see how it manages, but it would be assumed that this would be an accumulation, and the market would trade higher. Now, we don't really necessarily have any targets, of course, because Bitcoin's at an all-time high, but definitely something that we want to be paying attention to, because the market has been kind of tracking the crypto market for the most part for the better part of like 3 years. Other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan, and I will see you guys tomorrow.